A lot of the individual businesses look like they beat, but the bottom line miss, what do you guys make of that?
So it might be more, it sounds like it's margin because obviously revenue may beat the number. I will say there's something that was going on in the last couple of weeks where I think people were selling Facebook and buying and putting that money into Google. Because if you look at the valuations, they're kind of similar, actually. And there was all that uneasiness about Facebook and them changing the news and everything else.
Right.
So I think you had a little bit of that. So the flows were a little bit different, and the setups were a little bit different for Facebook headed in with low expectations and Google very high. But if it's a margin miss, I mean, it's something that people aren't going to like that, obviously, because this is a CFO that is very well regarded, and it was assumed that she would have a real good handle on margin. So let's see what they say. Let's get more detail. But that's my initial gut.
Yeah, go ahead.
Okay, so I'm looking at actually cost per click down 14% in the quarter year over year. I think that's a key number to look at. I think that probably explains the bottom line a little bit, but I actually think that's a positive. The fact that cost per clicks are going down, that means there's a lot more inventory, and so people bidding for ad space basically aren't having to bid as high. That just means that, you know what, there's more room for Google to grow in terms of the inventory of ads they're selling. Once a cost per click starts moderating and going back up, that actually is a bad sign, in my opinion, because that says inventory is slowing down.
And I would agree with you, but I think you want to have a balance so that you get positive operating leverage to the bottom line. If you miss the bottom line, that's upsetting to me as a portfolio manager. Doesn't mean that the growth story is over. It just means that I'd rather them deliver a little bit.
You want them to
both.
More predictable financial results, exactly. So I, as an investor, know what I'm going to get for it.
With the stock up as much as it's up 12% on the year, right?
Yeah, but for a company that doesn't do dividend, that doesn't do, it's like you want the top line to win all the time.
Okay.
It's just making me laugh. I'm thinking to myself, I picked a bad day to stop sniffing glue.
What do you make of the fact that
they're all great companies and they've all been great stocks, and at some point you don't want to chase them. As bullish as I am, and I think I'm the highest on the street or close to it.
Exactly.
And I think it's going to end, and I think that's going to happen by the end of this year for sure.
But do you need these tech companies? So we had Facebook sell off yesterday. We have Alphabet selling off today. Amazon kind of back at the flat line.
They're so extended. If you look at any metric in terms of short-term trading activity, they're extended, and just like the market, they're due for a pause. The problem is corrections are only considered natural, normal, and healthy until you actually get one. And now I think what we really want to do, as opposed to last year, we're looking for higher volatility as monetary policy uncertainty ticks up, and as some of these stocks may disappoint on lofty expectations, you get pullbacks. You absolutely want to buy that pullback as long as the credit market's
And some of them turn around once they get through the call. Facebook, we know that was the case with. We'll see what happens here. It's still early hours.